Let's talk about our two sampling approaches. Now, there are two general approaches to audit sampling, not methods, because within each of these approaches, we've got non-stat, and I'm saying them as a mouthful, so I'm going to say non-stat and stat. We've got these two approaches, and then under here, we have all the methods. So we've got the approaches, and then we've got methods under here. We'll talk about the methods in a bit, but these are the two overarching approaches on how to conduct the research or conduct the audit sampling, the testing. Both do require that the auditor is going to use professional judgment, and even the stat sampling, even though that's done by calculations, formulas, computers, mathematics, you as the auditor, it's still up to you to make the judgment call. For you. You can't 100% trust, and this is a yes, this is true in real life, but definitely an idea, throughout the audit exam is you as the auditor can't fully trust the computer, the formula, whatever the math says. You need to double check it yourself. Both require that you need professional judgment in planning, performing, and evaluating a sample, and in relating the evidential matter produced by the sample to other evidential matter when forming a conclusion about the related account balance or class of transactions. Now, you can use either of these approaches as long as you do it correctly. But either approach to audit sampling can provide sufficient evidential matter when it's applied properly. And we are going to go through both of these approaches. Again, these are approaches, not the methods. Let's dive into them further. Now, non-stat versus stat. First, non-stat does not allow for generalization to be made about the population. If you are going to test all of the expense transactions throughout the year, that is going to require a generalization that they are all the same, that they are all expense entries. Non-stat sampling does not allow for generalizations, and as such, it's going to be used for smaller populations or when you have limited amount of time to complete the audit testing. This is subject to bias because it is non-statistical sampling. When you do have numbers, mathematics, calculations, there's a lot less room for bias there. Now, stat sampling, as I've alluded to, it relies on mathematical formulas to select a sample that's representative of the population. When you've got a large population, such as tens of thousands of expense entries, you're going to definitely want to use statistical sampling. The disadvantage here is that it can be time-consuming and expensive. Now, with Excel and our wonderful tools in the accounting world, that can definitely be cut down on. But generally speaking, this is a disadvantage of it. In both these cases, the sample size is determined based on the sampling risk the auditor is willing to accept based on their professional judgment. All these lessons tie in with each other. This is for sure tying into our audit risk formula and your detection risk, control risk, and inherent risk. Now, diving more into stat sampling, the main advantage here is that you can use what you see in statistical sampling for a scientific basis for planning the sample size. If something can be quantified, it can be objective, and you can use this as compared to non-stat, which use human judgment, subject to bias. If you want to prove something for sure, statistical sampling is objective. Non-stat, again, does not rely on statistical principles or calculations. Also, it's going to be used when there's not enough data or time to perform a statistical sample, or when the underlying population's too complex or varied to apply statistical methods. You've got small amounts. Maybe you're trying to determine which subsidiaries you want to test, and the company has 10 subsidiaries. You're going to possibly use non-stat sampling to pick, let's say, 3 of the subsidiaries to sample. That would be an example of when we use this. Non-stat sampling is often preferred when the goal is to gain insight into aspects of the population rather than just get its objective number. So stat sampling, yes, let's just process these 10,000 expense entries. But if you want to non-stat sample, let's say, again, company's got 10 subsidiaries, we're choosing 3 of them. If your goal is to get a little more insight into those subsidiaries and understand them a little bit more and get more of a conceptual view of that, for sure, non-stat sampling will be your friend. We can also use it to obtain a representative sample of the population or focus on a particular subgroup or segment. So tying into the example of a subsidiary there. It's often used to obtain a sample size that's small enough to be manageable or capture a greater level of detail or nuance. Because, for example, again, you're not going to get a great level of detail of each expense entry because there's 10,000 of them. Here, you're going to get a little bit more detail when there's just 3 subsidiaries that were chosen. Diving into non-stat sampling a little bit further, we've got another example here. Here's just reiteration of what we've seen before. You want to drill it into your minds. We've got an example. So an auditor may be performing a compliance audit on a small business with only 5 employees, just like we are analyzing before, 10 subsidiaries. Here we've got a small number. It's 5 employees. In this situation, non-stat is the most sensible approach since the auditor has the opportunity to examine each of the employee's records and make a judgment about compliance with regulations. And we see here also, you can't really use statistical sampling for this. How do you use numbers to assess compliance with something? Yes, if it's a debt covenant, right? We can assess that if there are ratios that we can compare to. But if you want to get an idea about someone's general compliance with regulations, that's a little more nuanced and requires human intervention. Here, the auditor can then use the insights that were gained from the sampling to make a judgment about the population as a whole. Now, if we're seeing that everyone we chose of the 5 employees, let's say we chose 2 of them, they are completely non-compliant, then yeah, we might be able to say that as a whole, if a good chunk, 40% of your employees are non-compliant, we could probably say that it's a little more likely that the whole population would be non-compliant. Lastly, again here, non-stat is a useful tool when you want to gain an in-depth understanding of a population rather than a statistical inference, such as 20% of our entries do not 20% of our expense entries do not equal what they should, and we have variances with them. We've got both of our wonderful approaches. We've got non-stat and stat sampling, and we can use one, we can use both, but we can't use neither. We got to do something here. All right? And we can use either because they both provide sufficient appropriate audit evidence. It's up to you as the auditor to make that assessment. Now, I personally think a little bit of both wouldn't hurt, but it's up to you to use professional judgment, determine which approach would be best for you. Now, like most things throughout auditing, the better the result you'll get, it's going to take some time, effort, and resources. So we see here, statistical sampling involves additional costs of training auditors because designing individual samples to meet these requirements and selecting the items to be examined. This is going to be more expensive, more costly, but like I said, many items, many techniques, many points within auditing, the more effort you put in, the more resources you put in, the more you'll get out of it. Up to the auditor to determine cost-benefit analysis there.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.